Hello there, my friends. Chris Marcus here with you for another episode of Inside the Markets. And today we are going to be talking the gold market and silver market with Peter Spina of GoldSeek and SilverSeek.com. So go ahead and hit that subscribe button so you can stay tuned, as we're fortunate to have great guests like Peter. And with that said, Peter, who is calling in from the Czech Republic today, it's great to catch up with you and talk about the markets and some fascinating things going on. So are you there, Peter, and how's everything going today, my friend?
Hi, Chris. Great to be on your show. It's going well from Prague. We're getting close to Christmas here. It's quite festive, but very short days, quite cold. Not as nice out like in Colorado right now, but
Yeah, well, I was in Prague in the summer many years ago, and I remember it being quite nice there, and guess getting a little bit colder. But in terms of other things that are frosty, would love to get your opinion on this dynamic, which I'm sure you've been following, about Trump bashing the Federal Reserve for raising interest rates too quickly. And then sure enough, last week, we've heard commentary from Jerome Powell that all of a sudden they are thinking about pausing on the rates. So what's your take on what's going on with that and how you see it playing out?
yeah, the politics and the Fed is quite interesting because Trump coming into the elections and into office, he was talking about how the Fed had the rates too low and stimulating the economy too much, and now is taking the opposite position. So changes when he's in power, and it's a very similar thing we see when whoever's in power, whatever political party, it's always the same old story. They want to spend more than they're taking in, run these huge deficits, and they want to keep the rates low so they can finance these ever-growing deficits. And he can see how the deficits are exploding. The tax cuts have how the growth has picked up, but the deficits in the U.S. economy are growing, and the interest rates rising are also speeding up the cost of financing $22 trillion in debt, and growing at more than $1 trillion a year. This becomes a big problem. So now I think the Fed sees a problem with the markets now being a lot more shaky, and I don't know if it's Trump or the markets speaking, or the credit markets or the yield curve and different things speaking to the Fed, but he's definitely given the signal that they're coming to the end of this cycle of raising rates.
Yeah, which is incredible because, again, it's not like the Fed has hiked rates up to 5 or 6%. I mean, we're at 2.25%, which, again, for the audience to put in perspective, back in 1980, Paul Volcker, to beat inflation back then, took the short-term rate to 20%. Even Greenspan, following his year of 1% rates in 2003 to 2004, his final hike before he reversed course was up to 5.25% in 2006. So on one hand, yeah, Trump is right. As rates continue to go up, it's going to be a problem. Yet I'm curious your thoughts on the fact that we've only hit 2.25%. We still have that quantitative easing balance sheet, and already things are starting to topple over.
Yeah, I think they're coming against the wall here where they can only put the rates or take them to a certain level without really triggering the deflationary effects of all this debt out there. And it really, we've extended this recovery, this artificial recovery we've had over the last almost decade since the last crisis. And, there's a lot of imbalances out there. The Fed has been feeling pretty good because they've seen how their stimulus has resulted in all this growth. But, globally, central banks are cutting back on all the stimulus. They're withdrawing, not just the Fed, but other ones as well. And collectively, we're going to a neutral, if not slightly negative, global quantitative, the easing into a almost like a deflationary or liquidity crisis, where they're not being fed all this cheap and easy money. So now, everything's starting to respond to this, and they're going to have to now see how do they deal with the general global economy that seems to be slowing as well, and rates where they're trying to pull them up, and they have in the U.S. somewhat, but the rest of the world still, most of the rest of the world is still pretty far behind. And the U.S. can't go too fast ahead of the rest of the world at the same time as they're trying to raise rates. So there's all these things at play, and I think at this point the Fed's going to kind of give it another couple more, rate increases and have to stop and then see how things kind of settle. But we're seeing problems with it at these levels. So, it's now it's maybe a question of when will they start cutting rates, in a year or two, if things don't start to, if things start to get worse.
Exactly, which I know you've spoken about for years, many in the Austrian community have talked about for years, and where you have this dynamic where either they keep printing, blow out the currencies, or, I understand some people think, well, if we're undoing the stimulus, if we're raising rates, theoretically that would be bad for gold and silver, which, if you're just changing the fraction, removing the amount of dollars, then yeah, it would be a simple fraction, except for the fact that it's hard to see how these markets can stay intact with higher interest rates. And curious if you see this as the Fed being the one that's blown out this time rather than just some of the banks or Lehman Brothers last time. So really, no matter what the Fed does, whether it lowers or hikes, still an environment where you probably want to own gold due to systemic or currency chaos of one form or
There's all sorts of reasons to own gold with geopolitical risk, but the market and the risks of all these different bubbles, these financial and monetary bubbles that have been blown up all around the world. The Fed has helped to blow up the stock market. They've kept rates down, so they created this mega bull market in the bond market. That's the biggest bubble of all of them out there, the debt market. The equity bubble, the real estate bubble. It's the money's been chasing all this money that's been created, this cheap and easy money that's been floating around has been blowing up into these different areas. So where do you go from that? If the bond market's starting to fall, if the stock market's starting to fall, real estate stalling or starts falling, where does all this money hide, or where does it go? And the dollar's been an area, and so far it seems to be okay. But then when they start to see that, well, either we start to get a lot more inflation coming into the system and they can't raise rates because the system, the deficits are so high and they can't finance the higher rates, all of a sudden you start to get a problem where they don't have really strong control, or you kind of have a catch-22 is you're going to have to either sacrifice the dollar by keeping rates really high and create probably a deflationary situation, or you continue to do the quantitative easing. So what we'll get into in the next few years is these central banks will come in and start pumping things up again. But I just don't see how they can keep doing this. And at some point, it has to come to an end. At some point, this is going to fall apart. So the question is, are we coming into another, I think, cycle of this of these problems that we haven't had for 10 years? And since you look back in the last 10 years, obviously nothing's been resolved. Everything's gotten way, way worse. The amount of debt, all these imbalances. So what's going to happen next? And so the question about owning gold seems pretty simple at this point. It's an excellent insurance policy, and considering that the next crisis might be in money itself, then after the dollar starts having a crisis, where do you go from there?
Yeah, it's certainly going to be fascinating to see how that unfolds. And well, certainly the Fed can have some impact in what's going on and has the ability to delay things, not necessarily resolve them. So factoring that in, but do you think that the bubbles are popping now? Or is it a situation where this is another false start and again, maybe the Fed starts printing again and delays, but do you get the feeling with all this volatility in the stock market that we're seeing the bubbles begin to pop yet?
Something's up. There's something. It's almost like the insiders know something's happening, and you have the problems with politics and geopolitics coming into play as well, because the rest of the world has been supporting our debt for many, many, many years. But now you're seeing the breakdown and alliances being formed between Russia and China, and these different proxy wars around the world and so on. And it's turning into also the monetary system. And you see the rest of the world, like China, Russia, they're buying vast amounts of gold. Here we're selling gold. We're buying all these different into these different bubbles, and things are starting to, that whole cycle starting to play out. So yeah, people have been feeding into all this easy money into it. Now it's starting to reverse out. The liquidity is being drained. You're having problems with these different countries. They're starting to fight more. So, the Russians have sold off a lot of debt. There's different things happening. So I think we're rolling over in a lot of these different bubbles, and now people are starting to see that it can't keep going on. And for the first time in a while, we're seeing fear in the markets. People have been they've been used to for years now, this constant move higher in real estate prices, stock market prices. There's been a relentless, no fear that it never really had a big drop until recently. So all of a sudden people are starting to kind of wake up, and I think they're looking around and saying, hey, maybe this has gone too far. Maybe high 20 PE ratios is ridiculous. Maybe $22 trillion of debt and rising rates is unsustainable. Maybe these trade wars is going to help, trigger these different issues. And so it's a very interesting time looking at all these things kind of come together, and things can happen there's a lot of triggers out there that could spark the gold price. So you never know at what point that can happen, but looking around right now, it's looking like things could be developing over the next several months, next year or two, that takes gold to a much higher level.
Yeah, there certainly are. And Peter, you mentioned fear in the markets. Interesting, enough fear to get people going back to that conditioned response to buy U.S. Treasuries. So, and like you said, it'll be interesting when the bubbles do begin to pop, whether we've reached that or whether it's a little while longer to go. Again, if bubbles are popping and people are selling, that means there's money being freed up, and certainly will be interesting to see if even a fraction of that goes into gold and silver, what the impact would be. Although one thing you mentioned, China and Russia, something I've been asking people about, as many in the community know, a lot of the World Gold Council and some of the other numbers are questionable of whether they represent, whether China says they haven't bought any gold in the last decade or so. What's your estimate of how much gold China and Russia own?
Well, they certainly restrict all the supply coming off of the domestic production of the gold mines operating there. So they buy up all the gold that's being produced domestically, and then you see it being imported. I saw something today that more and more gold being found in India is coming from China. So there's a lot of gold flowing into the Chinese gold markets, but some of it's also being moved into other gold markets.
Right.
But there's been people who've studied this more, and they have estimates that China's sitting on several thousand tons of gold.
Mm-hmm.
It seems like easily 3,000 to 5,000 on the low end, but I would think they're closer to what, and maybe not at the U.S. level, 8,000 tons. As far as the central holdings of the country go, but then they've also created a huge demand for gold domestically among the citizens. They've allowed people to buy it, and in a way that's also the country's goal, because like they've done in the U.S., if they need to ever, they can just confiscate that. Especially in China, I would imagine it'd be a lot easier to issue a gold confiscation order, and people would respond to that. But the demand in China has been amazing, and they have longer term thinking. They look at it as a way to pass down wealth among generations. So it's a big demand out there, and they're continuing to accumulate, and the wealth continues to move over to that part of the world. They are savers, and here we are, consumers. Not to say that they don't have their own debts and speculation and own problems, but
right.
Yeah.
Yeah, and certainly we hear a lot about some of the credit issues with China, and I'm of the view that certainly if you want to make the case that China has a credit bubble, people probably far more qualified to speak to that one than myself, but do see that. Yet, at least again, you have a manufacturing base, and they do have a lot of gold and silver, which has been interesting, as especially over these past 7 years, we've seen a lot of countries buying gold, repatriating gold, yet the price seems to go lower and lower, which is a bit counterintuitive. as I'm sure you're aware, there are a lot of folks, and I include myself in this category, that feel the main thing driving the price has been the divergence between the paper trading and the physical gold trading, or if we want to label that, the manipulation in the market. And sure enough, in addition to Deutsche Bank, HSBC, UBS, all being fined, throwing Bank of Nova Scotia as well. The big news recently was that a former JP Morgan trader, John Edmonds, was fined and pled guilty to manipulating the markets, but interestingly said his supervisors knew about it, was widespread practice in the firm. So Peter, curious your thoughts on why the prices haven't gone higher, and if that's due to the manipulation, or what your take is on these latest developments.
I think the paper comics, these futures markets where you have less than 1% of the gold being represented by the paper outstanding. So you have, I don't know, what is it at today? 1 to 200. I've seen it spike to 400, where you need you have 400 fictitious ounces and 1 ounce of gold in the warehouse backing that contract.
Right.
Where we know where, if it ever comes to the point where people actually really do to start to take delivery, they don't have the gold. They'll just force you to take U.S. dollars as a payout instead. It's amazing. And to me, it's a speculative market. It's lost its function to maybe hedge risk, where it's become more of a way to manage the price, and it's had a lot of control over the price. We have news out where they have certain big players have admitted to manipulating the price. Some of it's just intraday things where they come in and they see way to mess with the small speculator traders, and they can move them around in the short term as well. But yeah, I don't believe that we're seeing the true price of gold. Right now, you also have a lot less retail interest and Wall Street interest in the gold precious metals market. So when they do get interested in the precious metals price, like in the last round, it also can get represented in that paper market as well. So right. It's I don't know. I think the thing to look at now with that is who's going to be taking control of the gold price. Is China yet at the point where they can start dictating what the price of gold is, or is the power going to continue to be in the paper markets? But for now, it's that's where the pricing is really, I think, in control and being set. But wait for the next crisis to hit, and if Russia and China wanted to kind of expose that, I'm sure someone would go in and try to take delivery in a large amount of those futures contracts and kind of show others that, hey, this is kind of it's like future contracts on Bitcoin, and there's no Bitcoin behind those future contracts, but yet it's helped moving the price. The traders are moving off of that. So yeah,
it's going to be, however all these things unfold, it just seems like it's going to have to be a fascinating next couple of years of life, especially for those of us sitting here watching gold and silver. And speaking of which, I'd love to get your comments on gold's little brother or sister, silver, which certainly a lot of people fascinated by. Again, we hear even more paper trading in silver market. What's your take on what's going on in silver and anything to look out for there?
I think for silver, it's a great time to be accumulating. It's an unwise decision to be selling at these prices, where you're seeing the silver price under production costs for many silver producers.
Right.
And where many silver producers haven't been really developing future deposits, they haven't been investing in exploration, they've been high grading their deposits. Still the vast majority of silver is a byproduct of other base metal mines, but as far as the primary producers that I follow closely, there's a lot of problem on the supply side that'll be coming up the lower or more sustained the prices are at these levels. So that's a big, looking in the next cycle in silver, you're seeing the conditions for a supply issue. There has been some demand fall in different categories. Industrial over the last several years has been strong, but it's fallen a bit. Investor demand in the last few years especially has really seen a drop. It's still strong compared to last decade. But a lot of the silver guys went over to the crypto markets, and we're kind of that investment capital left, I think, into those other hot markets. And then you have other like cannabis bubble up in Canada and these other hot markets
Right.
people are chasing. Silver's falling and falling, so people become less and less interested. For me, I love it because like I think end of last year, I picked up some 2017 Silver Eagles that had one of the lowest mintage in 10 years. So when, you get low premiums and a low mintage, that's an excellent value, I think, this year as well. So I like these situations. When I started off investing in gold and silver, it was also very similar. People weren't paying attention, and prices were cheap. So this is a time to be, saving and putting money into these markets now when people don't like them, and when it's obviously at a point where your downside risks are becoming a lot less and your upside rewards are growing. So silver maybe drops one more time. They dump it down towards $10. That would be an ultimate buy. I'm not going to bet that it's going to happen, so I'm buying. But if it does follow there, I'll put a lot more money than I would.
Right.
I'll over allocate at that point. But right now, it's a 87, 88 ratio to gold. Seems pretty appealing to me.
Yeah, you're preaching to the choir on that one. I've offended people by talking about silver too much over the years. And like you said, it certainly takes some will and fortitude to be a silver investor, because obviously it's a challenging market. Yet when you just look at the fundamentals and everything you just pointed out, if there's a way that this silver price makes sense in the long term, I can't figure that out. So I couldn't agree more that if someone wanted to say what's one investment that's safe with great upside potential, certainly silver would fall into that category. And perhaps last thing to touch on here before we wrap up, curious if you get into the mining stocks at all. I know a lot of folks, in my opinion, even as gold and silver seem undervalued to amount of paper that's out there. I've gotten the feeling that the mining stocks, even relative to these bullion levels, some of them seem a bit cheap, and curious if you dabble in those at all and have any thoughts there.
I do. I've been investing in junior mining companies since a teenager, and over the last few decades, I've spent a lot of time visiting mines, researching, meeting with management, and going to various conferences every year, several conferences every year, and getting updates and learning more and more about it, because it's a very difficult sector to invest in. There's a lot of risks, but the rewards are huge when you find the right ones. And I find right now the mining sector, especially even the producers are in the gold side are still doing. There's some ones that are doing quite well, and they're getting discounted in this market. And you can see some pretty low P ratios, and some of the stocks are coming down, and the gold price is holding. Some of the miners are getting affected though by the smaller ones. They have cash flow issues, and there's growing risks. So some of them are seeing some drops right now. So it's starting to get into a period where it's becoming more and more interesting as these drops happen, especially in the silver sector. But it's hard to time the bottom of the market. So you got to be really careful that you don't rush too quickly into some of these investments. But in my experience, at the bottom of the market, it's always really hard to buy at the bottom phase, and it's really hard to sell as it goes up. But when you look around and you see some of these companies sitting on some nice gold and silver assets, and the prices are just getting killed off in the market and no one's interested in it, that's the time to be looking around and finding some good deals. And I think I think right now is the time. I've been watching the market for the last year to take some more positions as this market looks to be turning around. But it wasn't really until recently I started to kind of put more cash out into the sector.
Right.
But as yourself, I'll be going to Vancouver next month and meeting with some more companies, and I have a couple other ones after that. So I'm looking around, and it's a time where it's a good time to be looking for new investments in the sector. Obviously, it's beaten down to just a horrible level, especially a lot of the junior companies, and
Mhm.
Some of the biggest companies were made in the worst phases of these markets. So, watch out.
Yeah, I couldn't agree more, Peter. And it's a lot of great information you're shared today. And I know you speak at the conference sometimes up in Vancouver. So hope to catch up with you there next month. And for folks who would like some more guidance, you have a lot of great resources on both your sites, GoldSeek and SilverSeek.com. And perhaps you have the great radio show as well. So again, gave the website addresses, but again, if you can just let people know some of the things you offer and anything else of where they can find you.
Sure. Well, goldseek.com, silverseek.com is, we have a platform where we have various contributors like yourself providing us with various opinions on the market. So it's a great site to keep updated on what's happening in the markets. We've been around since 1995 following the precious metals markets. And, we built the premise around the sites in investing into mining sector, into the junior and producing gold, silver stocks, but also into gold as money and what's happening globally with money, because it's obviously unsustainable what's happening, and gold will return as money again as we go through some of these next debt problems where we'll see money blow up and lose value. And it's happening in different parts of the world here and there. We see it in Venezuela, we've seen Zimbabwe, and also. So, it's a site where we talk about a lot of monetary issues and financial issues as well. So it's interesting to learn and watch this very interesting period that we're going through, which has been, for the gold investors and silver investors, it's been kind of dissuading to watch what's been happening. But now, as you've seen recently, things can change very quickly. And in today's world where information and things move very, very fast, it seems all of a sudden, next thing you know, like in 2007, 8, and 9, we're in another financial crisis. And hopefully you're well positioned and ready for that time. So this is a good time to be educating yourself and learning about what's going on and take action before it's too late.
Yeah, and a great way to do that is to check out GoldSeek and SilverSeek.com. Again, also, I'm a fan of GoldSeek Radio. You have a lot of great guests and interviews that do a great job of just providing the information for those who are ready and want to see it. So again, Peter, appreciate you joining me today. It's a pleasure to finally catch up and hopefully see you next month. And we'll look forward to seeing how the markets develop.
Likewise, Chris. It's been great speaking with you and look forward to seeing you soon.